Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business so you don't have to. Today we are looking at COPT Defense Properties and their end-of-year financial report. And let me tell you, this report is so top secret, you might need clearance just to understand the lingo, but don't worry, we will break it all down for you. COPT Defense Properties, get this, they are a real estate investment trust, or REIT, that focuses on properties near U.S. government defense installations. Think super secure office spaces and data centers. The goal? To give shareholders some nice returns. Let's dig into how they plan to do that. First off, their main strategy is all about what they call defense IT. They want to own, run, and build properties catering to the US government and its defense contractors. These aren't your average office buildings. We're talking high security zones for intelligence work, cybersecurity projects, and the like. Plus, they're getting into data centers because everyone needs cloud computing these days. What makes these properties special? Location, location, location. They're right next to the action, which is a must for many tenants doing top secret work. Tenants also invest a ton into these properties, which makes moving a pain. Another bonus, a lot of the properties leased to the US government meet super strict security requirements like anti-terrorism force protection. That's a big deal and a good thing for long-term demand for these properties. Now, in addition to all these high-security locations, COPT Defense also owns some regular office properties. But here's the thing, they are planning on selling them off when the time is right. That's because they want to focus on the defense and IT side of things. COPT Defense is trying to be more environmentally friendly. They want to build buildings that use resources efficiently, use less water, reduce waste, and are generally healthier for people to work in. The company also participates in surveys that rank real estate companies on environmental, social, and governance issues, scoring high in all these surveys. When it comes to money, COPT Defense wants to keep their options open. They want to borrow money at good rates, use different kinds of debt, and even sell off parts of properties to raise cash. The company's main goal is to always have enough money to keep growing and investing. Now, how does the company keep track of all of this? It's broken down into two main buckets, or segments: Defense IT Portfolio and Other. Their bread and butter, the Defense IT Portfolio, is divided further into subsegments like Fort Meade, Northern Virginia, and data centers. This helps them see where the money is coming from and where it needs to go. Let's talk about the people behind the properties. As of the end of last year, COPT Defense had about 427 employees. These aren't just desk workers, but include skilled tradespeople maintaining the facilities, a large proportion of which are minorities. COPT has core values, which are accountability, commitment, teamwork, integrity, innovation, value creation, and excellence. The company tries to promote an inclusive workplace and offers employees learning programs, recognition, and even time off to volunteer. The real estate game is tough. COPT Defense has to compete with other landlords, some of whom might have newer properties or be willing to charge less rent. They also compete for land and properties to buy, and even for investors' money. It's a constant battle to stay ahead. With every opportunity, there's risk. COPT Defense lays out a bunch of potential problems in their report. Some of them include economic downturns, competition, trouble borrowing money, and even the potential for government shutdowns affecting their US government tenants. And here's a big one: cybersecurity. Given their focus on defense and IT, COPT Defense could be a major target for cyber attacks. If hackers manage to break in, that could disrupt operations, expose sensitive information, and damage the company's reputation. To combat these cyber threats, COPT has cybersecurity risk management. Their point person, the Vice President of Information Technology, is a cybersecurity expert, and there is a plan on how to deal with cyber attacks. Alright, let's talk specifics. COPT Defense owns a ton of properties. Their bread and butter is the Fort Meade area. They've also got a strong presence in Northern Virginia, San Antonio, and near Navy bases. And they are investing big time in Northern Virginia data centers. But here's a number to keep an eye on: leases. Almost 20% of their leases are up for renewal this year. Can they keep those tenants or get new ones at good rates? That will be a major factor in their performance. Most of COPT's properties are concentrated around Fort Meade and in the Baltimore-Washington corridor. This makes them really dependent on that specific region, so any economic problems there could hit them hard. Since COPT Defense is a REIT, they have to pay out a lot of their income as dividends, which limits the money they can use for other stuff, like buying new properties. Also, there's no guarantee they will be able to keep paying dividends at the same level, because everything depends on how well the properties are doing. As mentioned before, the company recognizes security breaches through cyber attacks, which could damage the company's reputation among tenants and investors, but as of this moment, none have happened. COPT Defense is working to protect against cyber attacks. They're doing regular risk assessments and monitoring their systems and educating employees. It sounds like they're taking it seriously, which is good. The company's tech officer keeps the CFO in the loop on cybersecurity issues. The committee is routinely updated and the board provides oversight, making it clear this is a priority. COPT Defense says the company has a few accomplishments it would like to highlight. The highlights include strong property operations, leasing, development, and finances, as well as their plan for continued success. The company says demand is strong, and due to global conflicts and cybersecurity boosting, the company was able to improve lease economics by increasing cash rental rates and lowering rent concessions. The demand is supported in part by defense budget increases. Interest rates will be an important factor. The company is hoping the level of cost increases that we observed or experienced in recent years subsided to a more normalized level and therefore did not significantly affect us in 2024. In early 2026, the company has $400 million in unsecured senior notes with a stated interest rate of 2.25% maturing that it will need to repay. So any interest rates at a higher rate will be more expensive. For 2024, the company's net income increased by $218.3 million, or almost 300%, from a loss of $74.3 million in the year prior. This increase was driven by several factors. Increased rental economics and occupancy rates helped the company's bottom line. The company has a clear capital strategy. They maintain an investment grade to use unsecured debt from public markets and banks. Plus, they are monitoring capacity available under revolving credit facilities and equity offering programs to provide liquidity for investments and other capital needs. COPT Defense has major clients like the U.S. government and Fortune 100 companies that make up over 60% of revenue. Concentration is always something to be mindful of. With lease expirations always on the horizon, COPT Defense believes weighted average annual rent per square foot approximates market rent for the related space. So what's my take on COPT Defense properties? Well, they're in a pretty unique position with their focus on defense and government tenants. It's a niche market that seems fairly stable, especially with global tensions and the constant need for cybersecurity. That said, there are risks. Government shutdowns, cyber attacks, and rising interest rates could all throw a wrench in their plans. They have insurance, and it is a strong consideration in the reports mentioned previously in this video. Plus, as a REIT, they're tied to those dividend payouts, which can limit their financial flexibility. COPT Defense looks solid, but with the level of risk a stock like that presents, a fair value price range for this stock might be around $30-35 based on an assumption of stable growth and continued demand for secure properties, accounting for the current interest rate environment. I would have a slight bullish lean based on the current economic climate and increasing global unrest. Anyway, that is it for this breakdown. Let me know in the comments if there are other reports you want me to analyze. Please remember to like and subscribe for more detailed breakdowns.